Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello and welcome to the State of the Economy podcast by Business Line. Here we discuss the real estate trends and outlook for the year as well as for the months ahead. We have with us Mr. Dhruv Agarwala, the CEO of Housing.com, and also Prop Tiger and Makan. Hello and welcome to the podcast, Mr. Agarwala.
Thanks, Abhishek. Really appreciate it and very excited to be on this.
So let us start with a very basic question. What does the outlook hold for home buyers so far? We are almost, I think, if I take a fiscal, we're 6 months down the line. How are the trends go with it? And if I take a year, it's 9 months down the line. What has been the trends and outlook?
So, Abhishek, if we look at what's sort of expected ahead, we are in the middle of the festive season. And the festive season in India typically is a period where people spend money on items which they otherwise normally wouldn't buy through the year, be it consumer durables, be it automobiles, be it two-wheelers, homes as well. So this is a period of high demand for multiple product categories. And as I said, housing is no exception. So we do expect the next few months of the calendar year to be very strong and robust in terms of housing demand. This is also a period when developers do incentivize home buyers with many exciting offers to prompt fence sitters to actually make the purchase decision. Again, if you look at the policy regime, the RBI has again maintained status quo on interest rates, which provides a very stable home loan interest rate environment, which also encourages people to go out and buy homes. So my expectation is that the next 3 to 6 months will see continued robust demand for homes. Getting back to your second part of the question in terms of how demand has been over the year gone by. Again, it's been very strong demand despite multiple rate hikes. Demand for residential real estate has been strong. And I would attribute that to pent-up demand from COVID times. We've seen the market grow year on year for the last couple of years post-COVID. So that's pent-up demand, plus consumer confidence is very high as well. The Real Estate Regulatory Act has done a fantastic job in bringing back that loss in consumer confidence that we had seen several years ago. Again, people's attitude towards home ownership post-COVID has changed. People want larger homes because hybrid work is here to stay, in my opinion. People also are looking at homes in their hometowns in tier 2 cities. So again, there are several factors which have driven demand for residential real estate in this year, and which is expected to continue to drive demand for real estate going forward.
It's an interesting point, sir, that you mentioned about tier 2 towns emerging and people going back to their hometown. I'll just get back to that. But before moving into the tier 2 part of my question, possible to run us through some numbers on the demand outlook, unsold units, sold units?
Yes, look, it's hard to project what that exact number would be in terms of growth. But even if I just look back to share some data for you, which is indicative of what's happening in the market. For example, we have around 12 listed companies in residential real estate. They have reported a 43% year-on-year hike in sales. That's one big data point. Our own numbers, which Prop Tiger releases, we haven't released the numbers for the quarter ended September, but for the quarter ended June of this calendar year, we saw residential unit sales go up by 8% and supply go up by 11% year on year. So all the data points which we've seen through the year which has gone by suggests continued momentum in demand. And we've been seeing this year-on-year growth over the past 2 years, as I mentioned.
So going back to the tier 2 point that you mentioned in the first part of the question, in the first question actually. So which are these towns which you see emerging right now? I mean, it's definitely not going to be all tier 2 towns. It must be close proximity to bigger cities? Like, let's say, I don't know how to put it, but I'm just trying to get a drift of the
Sure.
demand there.
Sure. So look, as I always say, whenever there is strong demand in tier one cities, there is a spillover effect in tier two cities as well, because there is general positivity around purchasing homes. This has been one situation or one particular time where we've seen demand across multiple tier two cities going up. So, for example, I would say Lucknow, Jaipur, Indore have emerged as some prime locations for prospective home buyers. We're also seeing demand and property searches online gain momentum in places like Ahmedabad. Of course, I won't call Ahmedabad really a tier two city, but places like Chandigarh, Lucknow, and Coimbatore. If I look at data on our platform, searches in tier two cities for homes has, or I would say, growth in searches for tier two cities over the last couple of years has outstripped growth or demand for homes or online searches for homes in tier one cities. So clearly, we are seeing tier two cities across the spectrum go up in demand. Now, this could be attributed to two things. One is obviously there is increasing demand there for real estate, but also there is increased digital adoption for real estate in these cities, which is leading to a higher growth in online searches, which is the thing we get to see directly on our platform.
And when you say growth, is this driven by a hybrid work culture, or are these people, I mean, what exactly is this type of demand? It's not that these places have manufacturing bases or service bases. How is this demand being correlated? I mean, you can understand for a Bombay MMR region or a Delhi NCR region, you have surrounding service industry, some manufacturing. But what about these places?
I think when there is sort of overall GDP growth and there is growth across both manufacturing and services, there is a wealth effect which prompts people to buy homes even in their towns where they've come from. They might be living in cities, but they also want to invest back into their hometowns and have a better quality of living where they've come from, even provide better quality of living for the families who stayed back in the hometowns. So I think that is what drives that up. A lot of people, as you correctly pointed out, during COVID, went back to their hometowns, spent a couple of years there, and realized that, yes, it is important to have this flexibility and have this sort of insurance that if something like this were to happen again, they have nice homes to come back to in their hometowns. So I think it's been driven not necessarily by growth happening alone in these cities, but also by the fact that people who are in bigger cities want to purchase homes in their hometowns where they've come from.
Question then is on price rise. You said that we saw 43% growth in the 12 odd listed developers, but it has also been noted that there have been significant price rises in homes across some of these developers. Some of them are hiking it by 2 to 3% every quarter. Year on year, it's around 10% in some cases. So, do you think that there is more price stability required for the demand to pick up, or you think that these are the prices at which demand should pick up now?
Demand is very strong, Abhishek. I don't think I would put it the other way. I would say, despite price hikes, demand has been very robust and is expected to stay very strong. So, for example, if you look at the top 8 cities collectively, we've seen a 6% year-on-year price hike, with cities like Gurgaon, which have seen a 12% year-on-year price hike, and the other cities sort of have witnessed price hikes around the 6% number, give or take a few percent here or there. So basically, price rise has been strong, despite that demand has remained robust. For two reasons. One, because there has been this pent-up demand. People who wanted to buy homes and did not buy it during COVID will buy it willy-nilly. The fact that prices have also been going up also creates this sense of fear of missing out in case prices were to go up even further. So people are going out and buying. Again, there has been stability in the interest rate regime, despite interest rates being hiked up in the last 1.5 years. The last 3 policy reviews, RBI has kept the rates flat. That also gives confidence that if home loan rates remain stable, people can go out and take the mortgage to buy the homes. So I think it's a lot of it is driven by strong consumer confidence. The other thing is, if you see what's happening in India compared to the rest of the globe, we are in a remarkably strong position, both from a growth perspective, and even our stock markets have performed much better than other markets globally. People have made money in the stock markets, which again gives people more confidence, conviction about the future. And they have channelized some of that money in purchasing real estate, which is again a big reason for why, despite price hikes, demand has remained robust.
Another quick question on price rise. Are prices expected to go up further? You're already saying it's up 6 to 8% depending on market, micro market, maybe higher. But for the rest of the year, let's say 6 months or 3 months, however way you want to take it, is there possibility of price hike?
Look, price hikes, it is always possible that price hikes could happen. And that sort of expectation of a price hike is also what's pushing people, as I said, into buying homes now, because they don't want to miss out. But I think given what we've seen in terms of price hikes over the last couple of years, I think we would not witness prices going up that significantly as we have seen in the last couple of years. And look, frankly, my view on this, Abhishek, is that at the end of the day, price is a factor which always balances supply and demand. Mm-hmm. We've seen in the last 1 year, new launches from branded developers have been highly successful. And properties have been sold within a few days of those launches happening. With that kind of demand robustness, I think developers will be inclined to raise prices, where you ultimately get to a point where things settle down and the frenzy in the market starts to sort of subside and things get more balanced. So it is really a situation where the market itself will find its equilibrium, with developers taking prices up to a level where demand doesn't start to hurt too much. So given what the demand levels are, I would say prices would remain where they are or modestly go up till I think there is some cooling off in demand. But clearly one thing is that we're not expecting prices to go down anytime soon.
Since we're also talking about demand, an obvious question that comes to my mind is, what exactly is the category that is driving demand? There are multiple reports which say that affordable, quote unquote, I'm going by the word affordable here, I'm not going by the definition of affordable, is not exactly the flavor of the season, but it's luxury, which is going, upgrades which are going. If you could give us some idea on what the trends you see, in particularly in terms of demand drivers.
Look, when I would say pre-COVID, we always saw affordable as sort of the strongest segment, and when I say affordable, I would say in the category of about 40 to 45 lakhs. Below that, almost making up close to half of the market in terms of home sales. The baseline for affordable housing, I think, is always strong in India, just given the size of the population and general growth in wages, people becoming, more, or rather wage levels going up. Prices, I think, last 4-5 years had remained fairly stable. I'm not talking about the last 2 years, but the period prior to COVID, the 4-5 years prior to COVID, prices had been very stable. Wage levels had gone up. So I think demand was strong in that category. I think just given the sheer volumes and numbers, that will always remain a significant part of demand for homes. But where we've seen a big sort of change in the last few years since COVID has been the segment with the price tag of over rupees 1 crore. This used to account for about 15-16% of overall home sales prior to the pandemic in around 2019. But that has now become almost a quarter of the market, if you look at the market today. So that's seen a significant jump in terms of the sort of share of overall housing sales. Obviously, as expected, Mumbai dominates that segment with almost half of the plus 1 crore sales coming out of Mumbai. But again, cities like Pune and Hyderabad have also shown substantial growth in this segment. And just given the price hikes which have taken place, across the country, as I mentioned to you, over the last couple of years. Um, there will be other markets as well where you'll see more and more developers going in and launching projects in this segment. I think to the question you were alluding to, the point you were alluding to earlier, demand in the luxury segment has seen the most significant jump over the last.
If I go by the price tag of 1 crore currently and plus 1 crore and above price tag, and going by the corresponding purchasing power, average earnings of an individual, which is around, I think, $2,400 in case of India, isn't this a little too high a price tag in the Indian market?
Part of the reason why we had seen a down cycle in residential real estate around 2013 and 14, if you recall, Abhishek, one was, of course, the complete disappearing of consumer confidence in the market because of many fly-by-night developers who came in, launched projects, and never really delivered on their promises of completing. But also because of demand-supply mismatch, right? Developers were launching properties at a price tag which was just simply not affordable by the people. So you had lots and lots of inventory in price segments where there was just no affordability or ability for people to pay. Now, over the last several years, as you've seen, driven by the tech boom in India, the startup boom, overall GDP growth, which has far outstripped GDP growth across the globe, wage levels have gone up. And, if you see, HDFC publishes a very nice chart, their annual report every year, which talks about real estate affordability. And that's really a function of wage levels going up, how home loan price, or how, home prices have tracked, and again, where interest rates are. And then they come out with an affordability index. And frankly, that affordability index is at an all-time high right now. So homes have become more affordable. And that's why, many cities like Gurgaon, for example, you find it very, very hard in sort of the more sort of central parts of Gurgaon. I would not talk about the more emerging parts, but the more sort of developed parts of Gurgaon. It is almost impossible to find a property of less than 1 crore. As I said, that when a situation like this happens, where there is a lot of consumer confidence in the market, prices start to go up, people, because of the fear of missing out, start buying homes. It's also a time when you start seeing investors come into the market. What interesting trend we saw post 2013 was that investors disappeared from the market because they could no longer speculate, because prices were not going up, prices were going down, projects were not getting completed. So they disappeared from the market. When demand started to come back, end users who actually priced out of the market started to come back. And now with sort of prices again going up pretty much year on year for the last couple of years, and with expectations of further price rise, investors have also come into the market. So you would see some of this demand also being driven up by investors who clearly have the money available to invest in properties of more than 1 crore. So I think it's a bit of end user demand because of rising wage levels and better affordability, but also investors jumping into the market.
I can't help but ask this question to be very specifically. So when I look at the housing price rise, do you see a corresponding rise in home rentals, or for people living on rent? Is there a corresponding rise, or is it higher? How is that playing out?
No, so look, rental yields in India have, residential rental yields in India have always hovered around, the 3% mark, and which is actually very low, just given the cost of borrowing. But it's been one of those quirks of the market which we've seen because of a big rise in capital prices, which we saw between 2004 and 2015. So rental yields, I would say, have stayed around the same number. They haven't significantly gone up. But what I would say is that before we saw this sort of hike in home prices, we saw rentals going up, and then they were followed by capital prices. So the yields have stayed the same. Basically, rental prices have also tracked home prices, or vice versa. They've gone up in tandem, keeping the yields where they are. I wouldn't say that yields have jumped up significantly. And again, I don't have the full data on that. They may have gone up marginally, but they definitely have not gone down, which means that rentals have kept pace with home prices.
final question on this discussion that we are having is, considering the global economic scenario, primarily the slowdown concern, do you think a long-term impact of that could be seen on home sales? Because sometimes it reflects directly on commercial sales, but then again, we all know commercial and residential are linked to India, linked in India in some way because of obviously the demand factors and US investments into Indian services sector. Do you see some concern there, or you think we are out of that segment with Indian companies investing?
No, so look, country like India, needs foreign capital as well to support its growth. It's not just domestic capital. I would say that, where India is globally amongst other countries, I think we hold the most promise. We've seen the most resilience in terms of GDP growth. And frankly, amongst, countries of our size, when I say GDP size, the highest growth rate, even higher than China. And again, with issues in China, the world is diversifying away from China, maybe not leaving China necessarily, but at least adding on another place where they would like to invest in manufacturing, in building bases for software development, research, whatever that might be. They want India as an alternative to China. So you will see capital flows happening into India, which will drive up the economy overall, which will be good for real estate. We're also seeing increasing money coming directly into real estate as well from abroad. So I think in that sense, what's happening globally with regard to China and geopolitical instability elsewhere, I think India today is seen as a great place or a much safer place for foreign capital to come in. Now, of course, as we know, there's a lot of geopolitical instability across the globe. And, we are seeing that with more sort of recent development in the Middle East. I think that could potentially lead to investors sort of holding back and slowing down investments globally, because during periods of uncertainty, capital flows tend to slow down, or cross-border flows tend to slow down. That could impact us. Oil prices going up could also impact us in terms of inflation going up, which might sort of compel RBI to raise rates, which they've so far kept flat for the last several months. So I think these are some of the factors which could impair growth going forward. But otherwise, I see that India is actually a favored country in terms of global capital flows, and that should help the economy overall as well as our sector in particular.
Thank you once again for clearing out queries we had and running us through the trend.
Thank you for having me on the podcast. Appreciate it very much. Nice talking to you.
Same here, sir. Same here.